So I'm taking a look here at NQ. Okay, I'll solely be looking at NQ. Usually I have these three. I have YM and ES here as well, just to look at some SMTs. Usually when I'm doing recaps and stuff like that. Okay, so one thing I do want to say for those who have the book, the yearly sessions are extremely powerful. I have them marked on mine almost all the time. But one thing I want to mention, and I've been mentioning to the group as well, is watch May 13th. Okay, that is the beginning of a time model, which is called the time distortion model. And for those who read the book and look into it, you guys can kind of dissect what Ivan has written for each of those models, and kind of do your own back testing and your own learning for those. Okay. So I'm gonna go down to the hourly here, and let me get rid of this indicator. So I'm going down to the hourly just for one big reason, and it's just for the weekly time model. Okay, and I'm just going to talk about this briefly in here. All right. So for the weekly time models, we have the time fibs that are in the book specifically, and you will be able to draw these time fibs from the week open, this week's open, for example, to the next week's open. So in this case, I do futures, and you could do this one of two ways. I draw it from Sunday's 18 open all the way to the next Sunday's 18 open. If you are trading options, or if you're looking at SPY or QQQ, you would use the 9:30 CME open and draw it to the next CME open, which is again 9:30. All right. So how can we use these time models? Well, you can use them as points of or times of interest, right? So you can expect volatility to increase. You can expect, as Ivan says, an injection of volatility or price moving to a specific target. All right. So digital time theory essentially is key for essentially waiting to see what price will do at a specific time. Okay. And price will move based on what time it is. If it's time to go and grab liquidity, then the algorithm will kick in, and we will essentially see price move towards an important target or an important liquidity zone. Okay, I am on MNQ right now, and let me just go on NQ just because it's more accurate there. Okay, and essentially what we're looking for when we're looking at these time models is we want to make sure we're waiting for time. We're waiting even on intraday, right? It's the same thing. Time is fractal. Time and price is fractal on the charts, and we can see where prices wants to go, where price can go. For example, we have that this is a daily SIBI up here, if I'm not mistaken. I haven't mentioned it in his weekly outlook. Okay, in the channel. There's a channel for that, so if you guys are interested, definitely take a look at that. Okay. And I want to see this high at least be taken out, okay? Because there is a higher time frame PDRA, which is that daily SIBI, and then we do have liquidity here, right? And Ivan said Model 11 1034 is a perfect example today, and I'll go over that in a second, okay? And we can look at these the weekly model here, the weekly sessions, okay? And we can use them to see when price wants to finally move towards liquidity, okay? The weekly sessions also have root candles. I'm not going to go too deep into it, but I just want to have it drawn here so you guys can see how to apply it. All right. From 18 to 18, that's what I use for futures. From 9:30 to 9:30, you could use on stock CME open. If you guys want to use regular trading hours for futures, okay, then you will use 9:30 to 9:30. Okay. Make sure you're not drawing it and then switching it to regular trading hours, because it will get messed up. You guys can see it doesn't work. Okay, so make sure you do that correctly. All right. So what I'm expecting for this week, honestly, I'm expecting to see not much happen, to be honest. Tomorrow, I do want to see if we can head to this high here tomorrow, and then this is called. So we have Ash Wednesday here. Okay, this is usually it'll be either reversal or the time distortion model. If you have how the time models work is if you have, for example, this interval here be time distortion, meaning you have a bunch of consolidation, wonky price action, as many people would say, then you can expect the next model to give you some sort of a distribution move or an expansive move. Okay. So in this case, I'm kind of, assuming what will happen, right? Maybe this low is taken out and it's just messing around here for a bit, or maybe it'll go for this low before it goes for this high, right? But the point is, I'm kind of, gauging to see what will happen once these times come, all right? So the times are different in the book because Ivan mentions that we're using 930 to 930 CME prices, okay? So I'm repeating that multiple times just to make it clear. I know a lot of people will, be confused on, hey, where do I draw the time fibs? Well, that's the answer for you guys, okay? So make sure you're drawing them correctly, all right? So after this high is taken, what I really want to see is I'm curious to see if some sort of sell side will be engineered, okay, up until around Wednesday, up until the Ash Wednesday model. And I really would like to see all this be taken out and head lower. But I do want to mention that we have closed above I believe the 50% of last week's candle of this range, okay? So I am looking to see, of course, higher prices, and I really want to see how we react in that daily SIBI. So for those who have been in this Discord, I called out all this sell side here way prior to this entire drop 2 weeks ago, and I was calling out this BISI here on NQ, all right? And I was also calling out at least this order block here. I didn't expect to get it in 1 week, but we got it, all right? And now we have a huge reaction in this area, all right? Order block is super important. Okay, we also tapped a weekly, a daily SIBI, an old SIBI that was here. We tapped that as well. You can see that the wicks there tapping it perfectly, and now it's just heading towards PD arrays and towards buy side as well. So depending on how we react in this SIBI, there's a lot of low resistance liquidity here, okay, that I'm taking a look at, and I really want to see if all this will be taken out back up to all-time highs. And what I'm most, interested in is I want to see if that can possibly happen, which I don't think it will. It would be pretty wild, but, this market has been crazy in general. I want to see if that will happen before May 13th, okay? And May 13th is an important date. It has everything to do with the yearly sessions. Everything is fractal. You can do this on the weekly, on the daily, on the yearly, and if you want, Ivan and I don't cover that, cover the monthly, for example, but if you want to backtest yourself and use these fibs work on almost any time frame, but the ones that are most prominent and work very well are the yearly sessions, the weekly sessions, and obviously we have the intraday ones as well. Okay, so that's what I'm taking a look at here. I'm taking a look with those time models that I had drawn before. I want to see how we react in this area. Honestly, nothing much right now. It is a little bit tricky right now, taking a look at this. I want to say, please mark the new week opening gap. I always tell everybody in here that I personally love using it, and I think everybody else should too. It's extremely powerful. It's my favorite PD array because, especially with the time models, you'll be able to see what price does, especially at specific times on the chart. Okay, so with that being said, let me turn this off, and I really want to go into model 11 today. Okay, so I will pop on the indicator here. So here we have the indicator, and we're going to take a look and see what happened today. All right, so first thing is first, before the New York Open, you can see how we took some sort of buy side here. I wonder if there was an SMT here. Let me take a look. I haven't taken a look at today's session at all, or the one prior to it. So not much here. I don't think there's really an SMT here before this drop. So nothing too important here. But the reason why I'm pointing this out is because usually, was there an SMT 955? Let me take a look here. Oh, for the push. I was talking about before we headed down. So there's an SMT here. Right here, and I'll get to that in a second. Right, we kind of have like a little SMT there, And then I think I usually take a look at Dow as well. I like taking a look there. But there's also kind of a little, this one is like a little SMT, but I'd really look at ES and NQ there. All right, so why am I pointing this drop out? Well, this drop, we can see there is a little void here, right? This entire new week opening gap range is important itself. Let me get rid of this. Very important here, right? There's a little void. So what happens is we get a pretty large move down, okay? Right back to this little void here, back to the new week opening gap. And what happens is we get a little entry opportunity with this SMT as well, okay? And this plays out, you can use 1001 here for, you know, all these times you can use them to trade, and we'll go over that in a second. But what I want to point out here is, we're going to go down to the lower time frame here, okay? Let me take a look at here. Okay, so I'm just going to have NQ open, all right? So the beauty about these time models are, if you have a huge move, for example, in the AM, okay, right before 9:30 opening for futures, all right, what you can expect is for the Judas, which is from 9:55 to 10:20, for this, and at times model 11, which is from 10:20 to 11:10, what you'll see is price just moving horizontally. It'll kind of be choppy, right? Why is that? Well, because you have a larger move in the AM. Excuse me. If you have these larger moves, you can use these intervals as times to, or as points, and be like, hey, I don't know if I really want to enter a trade. Is there anything I see? Is it time for a move, right? If it isn't, then you don't take that trade, right? If you're not comfortable with it. That's kind of what goes on through my mind, right? And if you guys can see here, we're going to take a look specifically at model 11, which goes from 10:20 to 11:10. Even though you have this chop, right? And we kind of can expect it, especially because of last week's large moves. We got huge moves, okay? On Thursday, right? On the 25th, huge move up, right? And then you have another little tinier move up on Friday. What can you expect for Monday and Tuesday, right? It'll either be accumulation, you'll have reversal, whatever it may be. My point is, in general, you want to take a look at what price is giving you, right? And in this case, if you have price action like this, you can use the specific times to take trades, right? For example, as Ivan mentioned before, you have your 1034 root, excuse me, I almost said root candle. That's not what I'm talking about right now specifically, but you have the 1034 candle right here, this time specifically here, right? You never see this high again until way later, okay? Now look at this. This is an inner cycle line at 1034. You get that push down and you don't see that high again. So the reason why 1034 is important is because you usually will see for model 11, 1034, the latest it'll, or the earliest it'll start usually is at 1034, okay? And this almost applies for a lot of the models. For example, 1001, usually you'll have the move start right at 13, or sometimes even a little bit after, at 1330 specifically, okay? I'm just pointing out these times. They're not going to happen exactly, you know, today, right? And in this case, we had a little bit of a, you know, model 11 entry to right back down to the CE of the new week opening gap, right? And we can see how these times are working. So I believe, Ivan, if I'm not mistaken, do you see there was this SMT here at 9:55, this one here, right over here? I think this is the one that Ivan is talking about. And then we have that larger one there. Okay. So right over here, we have a little SMT, right? And what time does this move start? Okay. This happens every day, guys. This happens every day. What time does this move start? 9:55. 9:55 is that low. It's actually, I believe, the low for the day, for this entire session. Or actually, no, it's not, because we took it out. See, excuse me, my bad. I didn't see this. I wasn't on the chart today. But the low for the day until we kind of got this little move here bouncing off these root candles here. Okay, little move to take those morning lows out, the AM lows, and then eventually we got a huge move back up, right? So there's an SMT here, and you can expect, you know, to, if you are awake that early and you're trying to trade. I mean, for me, I say early because we're in the West Coast, so we have to get up 6:30 or earlier than that. But if you're not comfortable in taking a trade, right, you can look at the time. So, for example, if I was able to trade today, I would have seen that, hey, I'm at this new week opening gap. We just filled that little void, right? And we do have that SMT there. Okay, so I always have ES and Dow open as well when I'm taking trades. I always mark SMTs because SMTs are extremely powerful with digital time theory. Okay, ICT in general, right? So what happens? 9:55. You can try for a long. Okay, you can wait for a little reaction, place your order there. And what Ivan and I usually like doing, and I see Ivan doing this a lot, what he'll wait for is he'll wait for some sort of candle wick. Usually will be on the 5 minute, okay, or the 15 minute, right? Try to wait for like a little nice candle wick on the 15 minute, right, or the 5 minute, whatever you're using. And what will happen is we'll try to, just based on time, we'll try to enter at a specific time, and I'll get to that in a second. Your stop loss will be below that 9:55 low, and you can aim at some sort of liquidity. You can aim at New York Open, and you can also target any PD arrays, 5-minute SIBIs, 15-minute SIBIs, anything like that. Okay. Now I want to show you guys something very important, and that is the 9:53 root candle here. Okay. This candle is your savior. Okay. This candle, you will see it happen every single day. All right. This root candles can be used as premium or discount. So if price is below the root candle, that'll be in a discount. If it's above, it'll be in a premium, right? How can you use root candles? You can use root candles as areas of interest, similar to PD arrays. You can use them for quote unquote support resistance. We don't use that in here, but you'll see a lot of the times price will bounce off root candles, okay? In this case, 9:55 started that move up, right? And 9:56, right after the candle after that interval line, we get a close above 9:53. For me, usually that'll be a confirmation. So what do I mean by 9:53? Here's the opening price for the 9:53 root candle. If you draw it all the way across, that's what that little dash line is. Okay. You can use it. This is your root candle for the entire New York session. Okay. A lot of the times it'll be extremely accurate. All right. And you'll have candles wicking to it. For example, you can see candles wicking to it here. At times it'll get very close to it and it won't touch it. But also a lot of the times you'll get really, really nice wicks on it and the bodies won't close. Another example of a root candle that played out very well today, we can see price bouncing off of it, was 1034. Okay, this is your 1034 time, and then this is your 1034 root candle. We grab the opening price of that, we drag it across. Okay, and we can see we get a tap here. Get a little tiny close above it, probably by a tick, but what happens? Bounces off the root candle, comes back down to where, right? We have a little SIBI here, okay? And in this case, if you're in chop, what can you use? Right? You can use the root candles. Root candles are hidden liquidity. 1110, model 10 root candle here, once it goes back down, uses it, right? Not a single body close below it, uses it and heads back up to these relative equal highs. Okay? Same thing here. Another root candle being used perfectly to the tick. 1202. All right? This one, when it is used, this one is one of my favorites. When price uses the 1202 candle, it's just beautiful. It's very clean, right? So in order for everybody, I know there's going to be a lot of people who are going to be like, hey, what's, high probability for, which time model can I use for which specific day? Is there a high probability model, for example, model 11 or model 110, all those things? Usually we go into depth with quantum members on that, and regardless, if you look at the book, Ivan explains that all very well. The book is very straightforward. Ivan has done an amazing job on it, and he explains what you can expect throughout all these. But I want to show you guys, especially today, where you have this little price action, right, where it's kind of little weird, right? You can kind of expect to see, what happens during which model. What can you expect? If you have horizontal price like this, price just moving horizontally, you can use the vertical time prices. You can use root candles, and they work very well, right? One more thing I want to point out here is from 1034, right, from model 11, we start engineering buy side liquidity here. Okay, we go back down to the CE of that new week opening gap. Okay, usually model 110 will start at 1110. Okay, this is model 110. We'll start at 1110. Latest, sometimes it'll start at 1149. Okay, so an example for today, right? It's kind of hard at times because model 110 is a market maker buy or sell model, so an MMXM model, right? In this case, we can see 1137, that low, started that push up to do what? Take out all this buy side. Okay, so it's during these days like this when it's just horizontal price action, and where price is just referring back to root candles, right, which we have here. You will see, and you will wait for price to head to these specific inner cycle lines and also root candles, right? We can see here once price moves up, it actually touches the 1121 root candle right over here, and then pushes back down into a 1 minute BISI here, right? And then a little after 1149, right, it starts pushing up to take out all this low resistance liquidity, right? I do want to say it's much easier to look at it in hindsight after everything is said and done, to look at all this stuff and be like, oh, hey, I could have done this, I could have done that. So it's super important to just backtest, get used to the models. And that's what the beauty for the indicator, specifically for those who have it, is beautiful, because you'll be able to just backtest it. You'll be able to backtest it, look at how these times are used and all that and everything. All these root candles being used, for example, this day right over here. What day is this? Thursday. Thursday used the 1330 root candle right over here. And model 11 actually played out here, right? Very, very late, but it did play out, right? 1447, almost the low of this entire move, right? But 1330 was used, and we got to push up. Right over here at 1545 as well, we can see it's not the low, but you can use these inner cycle lines. That's the beauty of digital time theory, is you'll be able to see these times, and you'll be able to see them be used very frequently, right? There's a reason why we have a ton of lines. It's because price and time, they're fractal. They go from bigger time frame, higher time frame, to the lower time frame. And I tell everybody in here as well, higher time frame will tell you the narrative. You go down to the lower time frame, that's where you will find entries. That's where time is fractal and price will be fractal, right? And Ivan said OHLC lecture on YouTube will make it 10 times easier. I totally agree with that. Please go watch that, all right? Ivan does an amazing job just, going over all of that. And if you look at his YouTube, you will be able to see a ton of videos that he's posted that will help you guys with time, because the OHLC lecture will definitely give you what you need for sure. You can see why I took today's trade, because of model 11 and the 5 minute on NQ. Okay, so just to go back to what Ivan was talking about, let me just go to the 5 minute. So model 11 here, okay, I'm just going to take it here. So go look at the lecture, look at the 5 minute, go down to the 1 minute, and see how the time is used on there, right? Picchu said, I don't know if they're still in here or not. I don't think they are. But I'm going to keep the recap short. Just wanted to do NQ today because that's what I was looking at, and that's what I usually look at. And then we did have some really nice moves here for Model 111. And I just want to say, for these models, you can always use these vertical times all the time. You'll always be able to use them. You'll always be able to use the root candles. All right. And by the way, guys, I'm just like making this clear because I know a lot of people will be, suspicious. And I've had people DM me things like this where they'll be like, hey, did you just draw these root candles, right? Are these root candles like, do you place them there yourself? No, these root candles, this is the indicator, okay? Once the candle closes, the root candle will automatically draw. Will start drawing, okay? And they will go out throughout the entire day. So the root candles will vary based on where price is at the moment and what time those candles are created, right? They will be in discount, premium within a certain range, right? And it's great to back test it, all right? One last thing I want to show you guys there on this chart here is the Asia and London session. So this indicator comes in two, all right? Here's another example of the Osaka model playing out today, all right? The same exact concepts, right? Usually the beginning of the Asia session, you'll have your Judas, and then similar to New York, you'll have your Model 11, right? Your Model 11, and then your 110, and then your 1001 and 111 combined. Asia and London times are a little bit more accurate. NY session has more time options, but we've made it and designed it this way specifically because Asia and London need to have times that are much more accurate, and with backtesting you guys can see and understand why that is. Okay, I explained it to Quantum. I just don't want to go too much into it here, just because we've promised Quantum some extra info. All right. So here I want to show you guys one thing that I really liked on Osaka right now. We had a little 1 minute Sibi here, okay, but we are in a premium here, right? We took out this high, and now all prices are just doing is kind of going into a little discount, right? And what happens here is we have some sell side engineered here, okay, and right at this time, usually you'll have 1916 be the move for your Asia session. You'll have the start of that move at this time. If not at this time, you'll have it this next time, right? And you can use these points as pivot points, these times as pivot points, excuse me, right? That's what I tell a lot of people. A lot of people complicate it, they overcomplicate it, and they're just like all over the place, like, oh, how do I know which time will be used? How can I, predict this, predict that? Just use those times as entries, or use them to see where and if price will head to a certain liquidity target at a specific time, right? In this case, we had 1949. Right after this candle here, we never see the high of this candle again until later, right? We get that move down. And if you had entered in this Sibi, you could have waited, right? You could have waited for 1949 or before it. Stop loss here, for example. And that's the thing with Asia session, okay, is price will not give you clear PD arrays, and in that case, you will have to use time. What I just said there is a huge hint for everybody in here. So backtest that, and take a look at it here, right? It's happens every single day. You have the 2016 candle here, right? Not perfect, but it's pretty accurate. It gets pretty close. So what happens with this candle, right? Right at this time, we get a Sibi inversion. I've posted this on my Twitter as well. Okay, I've posted a New York session exactly like this. It was Model 11, 1110 was the low of the day, then 1121 had a little nice. I think it was 1121, or the inner cycle line right after that, where you get a candle inversion, right? Kind of closes above it and then continues to go higher. To where? To your root candles and to liquidity. All right. So that's pretty much it for today's lecture. Just wanted to show you guys how these times work. I know there's a lot of new faces in here, so I want to make sure everybody kind of gets an understanding of what can be, or how digital time theory can be used with all these models. Does anybody have any questions before I head out here? If you guys have any questions, put them in the chat. I'll go over them. This is recorded, so I will post this for the members. But I don't want to make this too long. Promise to make it a little shorter there. But if nobody has any questions, I will be heading out. I do see Pepsi typing here, so I'm gonna give it a second. All right, sounds good. Sounds good. So if nobody has any questions, um, if you guys have any questions, just type them in the chat. Let me know. I'll answer it. Don't be afraid to ask questions, guys. Just ask. Pick our brains. Pick everybody's brains. I'm learning from you guys. You guys are learning from me. That's what this group is about. But no problem, Pepsi. Appreciate you stopping by, and appreciate everybody else stopping by. I do have to head out here, but hopefully that was insightful. And Quantum members, I do see a few people in here. We will have our regular recaps for the rest of the week. It'll either be from me or Ivan. But yeah, of course, Ali. Of course. You guys have a great rest of your night, and I will talk to you all later.